Okay, fam, Tom Lee dropped some seriously urgent information about the elections and the big pullback in the economy coming up in the next 2 weeks. Don't worry about subscribing, smashing the like button, or trying to join the Discord just yet. We'll talk about that soon. Let's sit tight, put our thinking caps on, and let's listen to what Tom Lee has to say about the market and what's coming up. Before we listen to Tom Lee, though, free webinar this Saturday, October 19th, 11 a.m. Eastern, 8 a.m. Pacific. It is a free webinar. You will learn more in the 1 hour you spend with me than you will anywhere else. That's what everyone has said that's been at my previous webinars. Very limited spots, though, for this webinar. If you don't make it in, you will miss out. There's very limited spots. Links in the information box below. We're going to have a Q&A section so I can answer your questions and have a huge announcement during the webinar. Let's listen to Tom Lee right now.
Tom, in recent appearances, I would say that your conviction hasn't necessarily been quite as strong as it had been in some of your other calls, where there's been a time where you said the inflation data will be so good that the S&P will be up 200 points in the next week, and it panned out, and it played right into what you were saying. The last time you were on, I think your basic thesis was that market's still solid through the end of the year, but in the meantime, there could be some volatility and maybe even a pullback. Now I think you're saying it's been more stable than what you're expecting, and it has to do with liquidity and cash on the sidelines more than anything else.
Yes, that's right. You're right. We've kind of been sort of, I think, fooled by seasonality because we thought markets would be hesitant before, the elections, and it's October, but we've seen this market be incredibly resilient. So I've underestimated how strong this market's been. I think it really shows macro data is becoming less important, and it's now the fact that a lot of cash has been on the sidelines. For the last 2 years, investors expected a recession, or many thought when the curve uninverts, we got a recession, but at the end of the day, there's $6 trillion of cash on the sidelines, and October has turned out to be a great month.
We've seen it, evidence of what you're saying, and I know how closely you watch it. We've seen it on a daily basis over the last, I'd say, maybe month or so, where many days we're even down triple digits in the futures, only to end up 250 or 300 points by the end of the session. And with no backdrop of positive news, nothing to account for it, other than it seems like there's money on the sidelines coming in.
I mean, it feels like investors are underinvested in stocks. I think there's people who've dreaded 2024, thinking this is the year we slip into a recession, and instead, and we're seeing it with earnings, companies have been really resilient.
Yeah, we waited and waited and waited to retest the lows a couple of times in 2022 and 2023, and people weren't bullish at all. We didn't get great advances, and now it's almost unstoppable. And nothing seems to be able to knock it off a track, whether it's, I think the PPI and CPI were both a little hotter than people thought. The prospects for a Fed continued easing cycle are now open to some conjecture, I think, although most people say it's still going to happen, even though things are pretty solid in both the economy and the stock market.
Yeah, I think it makes sense for the Fed to be dovish, just because inflation is still tracking, especially PCE, towards their 2% target. And now we have some concerns about the job market. So I think the Fed has to be supportive. And I think this election, which is becoming less of a coin toss, I think because it's been a coin toss, people have been sitting on their hands. I think these are reasons markets are starting to have conviction, even in front of an election event.
I think we've soft-pedaled it too. The swing states have even some of the swing states that looked like solidly in Harris's camp are now truly swing states where Trump's up, in Michigan and Wisconsin, and that betting and everything else. And if NBC goes from Harris up 5 to Trump and Harris tied, and then you do a full field, and Trump is actually up in a full field thing. So I think you might be right. Bitcoin's at 65,000. You wouldn't say that the stock market's performing better because it's starting to look like it's less of a coin toss, would you?
I think markets like visibility. So if it looks like one candidate is now looking like to be the surprise winner, then markets can actually trade better before the election.
Wait, does it matter? You said markets like visibility, they have to like what they see on the other side of it, I would assume.
Yes. I mean, I'm probably just citing market history, but whether Trump or Harris wins, I think stocks do pretty well next year, sort of a post-election rally. But there are definitely differences in sectors and asset classes performance depending if Trump or Harris wins. But Bitcoin, for instance, is something to watch if Trump looks like he's strengthening because Trump is running on a pro-Bitcoin platform.
All right. Now, you said something, we'll get off of that, the politics. You said that you agreed with almost the asymmetric risk now. And I still think it could go the other way. I mean, I think the labor market looks pretty solid given that last report, and that we're still, if PCE is 3%, it's got to go down another 33% to hit 2. And they swore they're not moving the goalposts. It's 2. It's 2. It's 2. It's not 2.5, Tom. It's 2.
Yes.
And what makes you think that that's in the car? Who knows with the Middle East and everything else? But oil's back to mid 70s and could go higher.
Yes.
I'm more worried about it. I don't know. They're more worried about the jobs picture than stubborn inflation.
Yeah, I mean, you're actually right. Oil spikes can cause an inflation spike, and that would be a surprise. But if we look at what's been keeping inflation stubbornly high, it's been shelter, which in the latest inflation report finally is rolling over, and it's auto insurance, which is now just beginning to sunset. So in the second half, auto insurance becomes a tailwind. And then the question would be, are core goods going to stay under pressure to kind of bring overall inflation down? And it looks like core inflation, on goods, looks like it's going to remain soft. So I think inflation doesn't have the upside drivers except for what you're saying, a commodity shock.
So you just heard what Tom Lee had to say. I'm going to break it all down for you. But first, before we do that, if you guys are looking to grow your portfolio, take control of your financial freedom, maybe you want to retire early, and I teach students the strategies, the sentiments, the fundamentals, the technicals, the things we go over in these YouTube videos in full detail and in one-on-one sessions. You guys can sign up at investwithcorey.com. The link is in the information box below. You guys can just click on investwithcorey.com. Takes you right here. You can look at the case studies, which is my testimonials of students that have taken 8K to 18K, like Sherry, or Josh right here, who was up 10K in 60 days. And in the last 60 days, he's up like another 60K. He's made $100,000 on his $300,000 account. Go over and click on training. So once you click on training, all of your answers will be in this video. Then you can book a call with my team and I. So this way I can help you grow your portfolio. I look forward to seeing you when you're ready to take control of your financial freedom. So you heard what Tom Lee had to say. This is incredibly good news. He was expecting there to be a pretty major pullback for the elections, and it's starting to look like that's not going to happen. And I'm going to explain to you guys what's going on and break that down on what he was saying and why he was saying that. He also predicted 580 by the end of the year on the S&P 500. We're at 585, 584. So everything he has said has come true. Tom Lee is very good at this. I share most of the same sentiment he does on pretty much everything, but not 100%, but fairly close. And what he said, and I'm going to break this down for you, the market was fooled by seasonality. Everyone thought that September and October were going to be rough due to historically bad months. However, October wasn't very bad at all. In fact, October's been great. And a lot of the reason for this is cash on the sidelines and a resilient market. Now, what does he mean by cash on the sidelines? Well, when the market sold off in 2022, that was hedge funds and big institutions and market makers just selling off completely or mostly to go into an all cash position because the market was highly inflated during 2021 because when everyone was at home not being able to work, everyone started investing, trying to make money. Everything was overbought, over bullish. It was very, very overvalued. The market was overvalued like crazy. So they pulled out. And when they pulled out, the market started pulling back. More people pulled out and they went into an all cash position. Historically, when big companies and hedge funds pull out of positions in the stock market, it's due to inflation, just like the market crash in 2008, the housing market crash, that is. They pull money out and they put it on the sidelines, bonds, T-bills, and money markets. And what happens is they wait for inflation to taper off and for interest rates to be cut, things to get healthier, and they come back into the market. And typically there's a pullback when they come back into the market. Tom Lee's been saying the exact same thing I've been saying, that they're going to bring that money from the sidelines into the stock market during a nice pullback, and then the stock market will run. However, because of the resilience of the market and the interest rates being cut, inflation dropping like a rock, like Tom Lee says, and it really is dropping pretty heavily, and the Fed's being dovish. PMI data on manufacturing somewhat contracting but stable, and the payroll market, the jobs market, pretty stable. Inflation's coming down, things are stabilizing and looking very good. He also said that the stock market was underinvested. A lot of people sold off last December 2023 and into January before we had that bull run. You guys probably remember October was very rough last year, so was December. We had 2 really rough months. November wasn't much better. There's a lot of sell-off happening, and by the end of the year, end of December, the last week or two was really rough as well. Like when we look at that, a lot of companies were underinvested because they were thinking that there was going to be serious inflation issues, rate cuts may not happen. So all of these companies that were underinvested had all their money sitting on the sidelines at the end of 2023, beginning of 2024. And what happened is the stock market was very stable, had a good bullish run. There were some pullbacks in August, but it continued to do well in September and August. And with the rate cuts and PMI data, these companies, these big hedge funds and big institutions were looking at this as a buying opportunity. The stock market wasn't pulling back anymore. It recovered from August and they were underinvested. So instead of waiting for this pullback that still hasn't happened, they had underinvested. So they're now going to start investing their cash. So little by little throughout 2024, they've been waiting, investing, little by little. After the pullback, they invested some cash. 2023, going into 2024, these big hedge funds and institutions underinvested. And so when the stock market starts running, they start buying into the stock market. They see the big pullback in August, so they buy in some more, and no pullback has really happened. So all of this bullish sentiment is a lot of big hedge funds and institutions that were underinvested that are now putting their money in. Money from the sideline, money markets, is starting to come in even before the pullback because it's looking like this pullback may not happen. And if it does, it's not going to be anywhere near what we thought it was going to be. Now, in the next 6 to 8 months, we should be on par with 2% inflation. It's yet to be seen, but that's where the Feds are tracking, and that's where we're headed. We still have another interest rate cut before the end of the year, and we have another 1, 2, maybe even 3 interest rate cuts in 2025 because we're looking at 50 basis points by the end of the year, which is additional to the 50 basis points we already received, and another 25 to 50 for 2025. So we very well could see interest rates drop another full 100 basis points between now and summer. Another reason that Tom Lee said that the markets were a lot more stable and bullish is also the unknown of the election. It was kind of a coin toss. It was up in the air. Nobody knows what's going to happen with the election. And it's been like that for the past couple of months. Harris was up, then Trump was up, then Harris is back up. It's very undecided. But as the last few weeks have been closing in, Trump has been gaining a lot of ground, and it's now looking like the swing states are now leaning towards Trump. And really, when you dive into the data and analyze it, Trump has a pretty decent lead and is expected to win this election. And the market is pricing that in. Now, it's not pricing this in because it's Trump per se. It wouldn't be pricing it in if Harris was in the lead either because of just that. What I mean is that the market's pricing this in because it's no longer an unknown. It's becoming more and more apparent Trump's going to win, so it's no longer an unknown. We know what to expect. And if Trump wins, like Tom Lee said, Bitcoin and crypto is going to run, and it is going to be a pretty strong market leading in and out of the election. I expect there to be some pretty strong bullish sentiment the day or two after election. There's going to be a lot of running. DJT, Donald Trump stock, if he wins the election, is going to run pretty strong in my opinion. So there's a lot of things to think about. Now with the elections coming up and no longer really looking so much like an unknown situation or a coin toss and it being more of what we expect Trump to win, we've kind of thrown that coin toss out the window. So now we're looking at something that we have more of an understanding or more of an expectation of, which allows there to be more bullish sentiment in the market. That with inflation dropping, that with money on the sidelines, uninvested or underinvested companies now bringing money in doesn't really give it a lot of room for a pullback. And that doesn't mean a pullback's not going to happen. It just means that there's a chance, a very good chance now, that this big pullback we thought that was going to happen may not happen, and you might not want to hold out too hard or too long or much of your capital. You might want to start investing slowly and trying to time some positions because it may not happen. And if it does, it may be very small by comparison to what we thought. Overall, the market is starting to look like there may not be a pullback. And based on what Tom Lee says, we might want to just start investing slowly now and start getting into positions, because if the pullback doesn't happen prior to the elections, we may miss all opportunities to print some serious cash because the markets will ultimately run after the elections. Guys, don't forget, free webinar this Saturday, October 19th, 11 a.m. Eastern, 8 a.m. Pacific. Link in the information box below. I hope to see you guys there. Limited spots remain, so you guys got to sign up before it's too late. Huge announcement and a Q&A. You guys will learn more in the 1 hour you spend with me than you will anywhere else. If you guys want to sign up for the coaching, Discord, and of course the training course, you guys can do so at any time. InvestWithCorey.com. Links in the information box below. I'm driven every single day to help you guys grow your portfolio. We'll see you on the next one. Take care of yourselves.